Today we're going to talk about how to not compound your mistakes after you make a wrong decision when investing or trading or speculating or betting, gambling, any of it. Okay? We're going to talk about how to not get emotional when money gets involved, especially when it's real amounts of money. It's very easy not to get emotional if the most amount of money that you have invested in this market is $1,000. Because if you only have $1,000 invested, that probably means you're younger, you don't have a lot of money, and if you lose the $1,000, yeah, it's a little while worth of wages perhaps, but it's not often going to be life changing, right? In other words, you can make that $1,000 back relatively easily. But once you get started in the bigger decisions, once you start investing larger sums of money, then emotions start to become a very real factor. And that's sort of the part about investing in cryptocurrencies that I think a lot of people don't understand, because I suspect a lot of people that invest in cryptocurrencies don't actually have that much invested. So of course they're going to be larger risk takers. Of course they're going to be buy and holders because the strategy has worked fairly well, and they need the 5 to 10 times their initial investment to make a sizable sum, right? But once you start getting into those larger amounts, you start getting affected a lot more by wrong decisions, because it starts becoming a longer and longer time frame that you have to work to get that money back. So today we're going to talk about how not to compound those mistakes, because you can bring yourself to financial ruin after making a wrong financial decision, okay? I made a suggestion in my last video that I was going to put in a buy stop at $11,600, and well, actually I said somewhere between 11,500 and 11,800. I ended up putting it in at 11,600. Price went all the way up to, if we go back to the 5 minutes here, price went all the way up almost to 11,900 and then immediately reversed downward. Now, I said after I put in the buy stop, I was going to put in a sell stop undercutting $11,000. And that's exactly what I did. And I actually gave it a substantial amount of room, because I've watched Bitcoin a number of times break below a certain $1,000 milestone, and it often reverses before it reaches 700. So that's where I put my sell stop. And what ended up happening is, unfortunately, this particular time, Bitcoin went fairly lower. It went down to 10,600, and I got whipsawed out of my investment. What is whipsaw? It just basically means that price went down pretty much exactly to my sell stop and then immediately went back up, right? It's sort of that emotional event that happens, that anytime you make an investment decision, the exact opposite of what you want to have happen happens. Of course, that's not always true. It just feels that way because it always hurts more when you're wrong than when you're right. And that's really the focus of this video, okay? Because right now, this literally only just happened 30 minutes ago. And so I want to talk about it while it's fresh. I want to talk about my emotional reaction to it immediately, and how you can get yourself in a situation where these type of events don't bother you. Now, the easiest way to do that is to scale your positions in such a way that it does not matter if you lose money. Okay, that is probably the easiest way to not get emotional in the market. You know, for me in particular, I said that I was not a huge fan of Bitcoin over $10,000. So as a result of that, I didn't actually scale this position substantially. Okay, this was not a big loss for me relative to the size of my cryptocurrency portfolio. And therefore, for me personally, this was not an event that really made me feel all that stressed out. And if you watch my Twitter, you know that I watched it with quite some interest, watching Bitcoin fall like this. And it was actually kind of exciting to watch it, and I lost money. But because my position was scaled in such a way that I could afford to lose it, the emotions don't come. So I'm not going to compound that mistake. This is what most people end up doing, unfortunately, is after they make a mistake like that, they decide to buy back in the second they see Bitcoin rising again. Okay, and that's a fine decision to make if you are able to justify it from a logical perception. But what often happens is people decide, oh, I'm just going to buy Bitcoin. If it just goes back up to my initial price, then I'll break even, and it'll be like I never made the mistake in the first place. And this is sort of a gambler's fallacy, kind of like when you're down 20%, then you make a bet, and you hope that basically if you win that bet, you're just going to walk, right? Because you break even, you're happy to get back to your initial pile. What's the reality is you have to make decisions based off of what makes sense to you, based off of your analysis of the market. And for me personally, I don't believe in buying Bitcoin at this level, so simply I'm not going to. I'm actually not going to buy it once it goes back up to 11,600 if it does. I'm not actually going to buy it at this point in time until I separate some time between me making this mistake and whenever it actually happens. If Bitcoin actually reaches that level, I need a little bit of time to adjust to make sure I'm not making an emotional decision. And this is, I think, very important. A lot of people don't take this time. A lot of people feel this rush to, they have to make the decision now. Like, imagine if Bitcoin jumped up to $12,000. Just theoretically, imagine that it jumped in the next 5 minutes to 12,000. It's not even that unrealistic that it happens in the next 12 to 24 hours, okay? It's not even unrealistic that it goes up to 13,000, given the history of Bitcoin over the past couple of weeks. So if that's the case, how do I make sure that I don't make an emotional decision and follow the price? All you have to do is give yourself some time. That's as simple as that. You just have to separate some distance. And usually the easiest way I've found to do it is actually to get a good night of rest. After you wake up in the morning, usually you can make a more rational decision regarding what your next move is going to be. So that's essentially what's going to happen for me. Regardless of what Bitcoin does over the next, 24 hours or so, until I get up tomorrow morning, I'm not going to make any decision with Bitcoin, with the exception on the downside. Okay, I already made a decision for Bitcoin that I would buy it at any price at 8,000 or lower. Now, it's very unlikely that that happens in the next 12 hours or before I go to sleep. But if it were to happen, then I would buy Bitcoin and a ton of it, right? But otherwise, until tomorrow morning, I'm not going to make any trading decisions with Bitcoin. Unless maybe, if there's a big catalyst that changes my mind about the market. But otherwise, if there's no catalyst, if it's just normal trading action, no decision is going to be made. So that's the first thing. Get a good night's worth of rest after you make a wrong decision. It's going to clear your mind. It's going to make you think better about the markets. That's the first thing. The second thing is you really should think about things relative to the size of your portfolio rather than their absolute size. So in this particular situation, yes, I lost money. It was a bad decision, but the point is, relative to the size of my portfolio, this mistake was not that costly, okay? So, and I was prepared for this to happen beforehand. That's the beautiful thing about having trading rules, is that you can actually have situations where you're perfectly okay with either outcome happening, right? Now, I know a couple of you are going to take this opportunity to talk about why buy and hold is the best strategy with Bitcoin, or basically any investing at all, because it's the holy grail of investing. It works out for almost any asset class over the long run. You're almost always going to make money when you buy and hold. There's so many statistics out there about how poorly day traders do, or how poorly swing traders do, or scalpers, or this and that. I get that. I really do. And I've already talked about in a previous video, I'll probably link it, where I talked about buy and hold versus trading for cryptocurrencies. And in that video, I provided a bunch of empirical evidence that active investors actually underperform passive investors in traditional markets. And I get the logic that it would work just as well in this market as it absolutely has. I mean, if you look at Bitcoin, it's just skyrocketing again, right? So I ended up in a situation where I did lose quite a bit of money. I got whipsawed out, and Bitcoin's all the way back up at roughly 11,400 at this pace, right? Who knows what it'll be by the end of this video. But on the flip side, okay, when you trade, a lot of people think of trading as a way to get rich quickly. That's not how I use trading. I've never used trading as a way to power jump my gains. Okay, that's, in my opinion, the wrong way to approach trading. The way I've always approached trading is a way to reduce risk. When you see risk increasing, you pull back from the market. When you see risk decreasing, or you see fear in the market, that's when you pile in. That's always been my perception on risk. That's always been my perception on trading. I know a lot of people think that trading is sort of this way that people are trying to rush their capital gains. And trust me when I say you want to rush your capital gains, then you just buy and hold Bitcoin, because it's done phenomenally over the long term here. And this is obviously just back to October, but if you look at it obviously over a much longer time frame, Bitcoin has done just fine. The reason I trade is not to get higher returns. I trade to reduce my risk. This was actually a bit of a different strategy for me, to buy on the upside, to use a buy stop. I traditionally don't actually use buy stops because, well, actually, I usually don't use stops at all, because situations like this happen where you get whipsawed. But it worked really well for me when Bitcoin was going up to 11,000 initially, the first time, right? When this situation happened, I actually avoided getting hit on this because I actually kept a fairly tight stop as Bitcoin was going up. And Bitcoin just kept going up, so I actually didn't get whipsawed out until Bitcoin finally decided to crash all the way down to, 8,500 or whatever it was. And holy mackerel. Yeah, talk about the volatility in Bitcoin, right? But the point of all of this is to say, when you trade or invest or whatever strategy it is you're trying to employ in the markets, my number one suggestion is get your emotions under control, figure out how to scale your positions. That's the easiest way to make your emotions go away. If you're an investor, don't check the price every day. Okay, if you're a buy and holder, all the people that are on the Bitcoin Reddit, they check price almost every minute. Okay, I mean, they check price so frequently. And all I have to say when it comes to that is not what investors should do. Okay, it's like one of the worst pieces of advice that people can give you when it comes to investing. It's the reason why most people don't check their portfolio. It's why they suggest that retail investors do not check their portfolio. I'm going to switch over to the 1-minute candles here because this is fairly interesting. But do not check price if you're an investor. A true buy and holder, which a lot of people preach that they are, don't check the price. I mean, if you're really a buy and holder, what difference does it make to you if Bitcoin is 11,000 or 8,000 or 5,000 or 20,000? It doesn't make any difference, right? Because you're going for those long-term capital gains. You really should go for the long-term capital gains, by the way, if you are investing in Bitcoin for the long term. At least try to make it so that you have a position for longer than a year. And if you're a trader, the easiest way to not get emotional is to scale your positions correctly. Make sure that you understand your situation in terms of your entries and your exits before you get into a trade. And it's as simple as that. Your emotions will go away over time. You'll get used to this. And over time, making the wrong decisions will become easier. And what I would suggest to do, this has been a great learning opportunity for me, is just how emotionless I can get. Because it is so easy to get emotional when your decisions are in the public eye. Okay, let me be very clear about that. Making the YouTube channel and making calls is probably one of the hardest things that I've ever done. I've done it with friends, I've done it as a professional, I've done it in all sorts of situations, but I've never had it where, thousands of people actually are aware of my decisions in real time and can determine if I'm right or wrong. And of course, nobody gives you credit when you're right, but people give you a ton of credit anytime that you're wrong. This has been a great learning curve for me. For those of you that want to take the opportunity to continue to say how bad of an investor I am or trader, please do so. It's actually really teaching me a lot about myself. I thought I was steel-skinned after dealing with wealth management, but you guys have taken it to another level. So keep being you. I appreciate your input. I really do. Everybody that talks, even the people that bash me, you make me better. You really do. So that was really corny, but anyway, we're going to end this video there. This was a fairly long video, longer than I expected, but I just wanted to talk about this because it just happened, 30 minutes ago, 40 minutes ago, and I really wanted to provide commentary on it in real time so that everybody was aware of how the emotional process works. As usual, I hope you guys enjoyed this video. Check out the description for some referral links if you're interested in supporting me. Otherwise, leave a like, comment, and subscription, and I will get back to you as soon as possible. Thank you for watching.